Hello, guys. Happy to be here once again. And today we're having Christoph Radecker. So it's an incredible pleasure having you here on our show, the TradePod. So before we start and before we dive deep into your story and into your philosophy of trading and into your pretty interesting resume behind you, tell us a little bit about yourself. So, how are you?
Thanks, I'm good. I'm good. I'm in Liechtenstein right now. So it's a very small country in the middle of Europe between Austria, Germany, and Switzerland. And yeah, I would say that's the my current step. Yeah, where I am currently located, and I mean, yeah, let's say trading wise, I'm doing this business now for almost 20 years and started to trade yeah back in the days when there was no fast DSL, there was no Starlink, there was barely any really great software, and for sure no apps on the cell phone. That's how I started. And yeah, I'm a Germany basically. I'm a German citizen, but living in Switzerland, having my office in Liechtenstein. And yeah, I spent my last 20 years in that trading field.
Awesome. So, 30 years of experience. Tell us what have you done and accomplished over those 30 years?
Yeah, as I said, I mean, what if, looking back in retrospective, what I really loved about it was that I really saw, let's say, the how what I saw was really how the technology improved. Let's say how the markets really improved, what changed over the time, and I mean, I have been in I had only just a few stations in my business career, so to say. So my business, or my let's say business and trading started with in, let's say 2007 or so around that time when I was a client of NinjaTrader. And with NinjaTrader, I mean it's a futures trading platform. I was there. I was a client first, and then I stumbled over the platform. And back in the days, I had two options. I had TradeStation. I'm a client today of TradeStation, and I'm still with NinjaTrader. Let's say on the platform side as well. And I was a client first, and then I loved the technology. It was unfiltered tick data, and I wanted to bring basically the technology or the product to Europe. I finished my university, and the only thing what I had in mind was trading. So I wanted to yeah remain in that field. And what happened is that I met the owner of an order routing system, which is basically yeah, the IT part, which does all the order routing, market data, and so and this is how it started basically in 2007. And there I from there on I started to be in that business or in field of this business every day. And yeah, that's basically what happened. Yeah. So give me just 1 second.
Yeah.
Mm,
So, um, I would ask you this. So, you are one of the founders of the trading bit.
yes.
Tell us, I'm curious because there is a
Mm,
question that I always been asked, and as a non prop trading company founder, I would like to ask, how do you found such a business? First of all, what's the business plan behind such a business? And how the investors for that business supposed to make money?
mm. Okay.
How
I
you
mean,
make money?
okay. So I mean, in reality, what we know, or what everything what let's say in trading, or especially in leverage trading, what I mean, I would say it's no secret that 99%, or let's say 95% of traders lose over time. Okay. So
Mhm.
the idea of the trading pit was something, or when I came around with that idea, I wanted to basically improve the overall, let's say, win-loss ratio of traders. I mean, there is a few obstacles what you run into when you trade. I mean, for sure, it's you have limited risk capital, you have for sure limited discipline. And when you start out with a demo account, the demo account or simulated account of your broker with the data feed is not a it's not a real good representation of a real money account. There's less emotion. You don't have to be disciplined because if it doesn't work, I mean there is no pain. And when I've kind of fell in love with the idea of the trading pit, or that was really because I wanted to do something in Europe. Let's say I was with NinjaTrader, or I built up NinjaTrader brand in Europe for 13 years, something around that number, 13, 14 years. And, I kind of was fed up with the US guys dominating the trading world. That's the truth, okay? Because I mean, I thought that Europe really was way behind there. I mean, there was no real innovation coming from in the trading field, and I thought, hey, maybe it's possible to have a great product which benefits the traders on two sides of things. Traders will lose. I mean, I said 95% of traders in leveraged product lose, no secret. But let's say with a prop firm, they will lose less. Fact. If traders, though, are profitable, they will have the ability to be able to be scaled way faster, way better, and have a risk management next to that. So that was the original idea. So we wanted to be aligned with the traders, and we didn't want to be in the boat like let's say like most of the forex brokers, something like that. And that was the simple idea in the beginning, nothing else. And
Yeah, but how does
that
such a company makes money? Because look, by the end of the day, if a trader finds success, you need to pay him. Like there is a profit split.
Mhm.
And I ask
I mean,
myself,
okay, that's pretty easy to say. I mean, that's also no secret, right? I mean, when a trader loses, and I just for the record, I mean, I sold my shares at the trading pit a couple of months ago, right? So early 2024. Um, but it's for sure 95% of traders lose over time. But in, let's say, the prop firms, for sure you collect, let's say, the sign-up fee, whatever you name it, and they collect the money. And this is income of the prop firm. But, and that's what comes now, you're basically referring that basically the profits of the traders are being sent out to the traders. So it's a kind of that money which you collect or is being sent out. I mean, I consider at the trading pit, at least it was the case that there was the traders, I would say that most of the money we were really making was from the sign-up fees, but we had a lot of investment to do of traders we wanted to replicate or wanted to really route to the live market as a signal provider. The problem is that most of the guys, sadly, and this is a lesson I've learned as well, are not disciplined enough to be able to trade in, let's say, in these barriers you have to give them. Let's say it's a daily loss limit of X%, it's a maximum position size of X%, of X. That's basically, sadly, most of the traders cannot trade in that field. So the prop trading environment, I would say today, is much in the favor of the trader, but not. I believe that most of the firms have issues to maintain the conditions they offer right now. This is my view on that, to be honest.
mhm. So, but yeah, I was wondering if after all, you know, 95% of all traders lose money, but what about the 5% that actually makes money? So how do you provide them with an environment for $50,000, $100,000? Because this is from not accessible to accessible capital on your hand, like hypothetically is existed. This opportunity existed nowadays. And then I'm just wondering, of course, like um how you how prop firm companies are able to provide such a trading environment. Like what is it? Is it a simulated environment and you
It's
do
both.
your
I
trading
mean,
over?
in the end, the goal is to put these guys to the live market. And let's say the steps before putting them to the live market is just a kind of a test drive to find out if they're disciplined enough. And I want to give you one good example. Um, I mean, as I said, I'm in this business now for 20 years, so I know a lot of people. And in reality, if you find out of 10,000 guys, I would say three who are good enough you can put to the real market and who are really this kind of this the stars you're looking for, they will make you so much more money than the, let's say, than the other ones. I mean, that's basically what in reality the big problem what prop firms today have is to find out how profitable or how consistent traders really can be. In
Hmm.
reality, when you look at some offers, I mean, I'm not really in the. I use prop firms for my trading today as well. And when you look around, most of the firms are you're allowed to be in this, let's say, performance account or in an account where you make money, though it's still simulated after, let's say, latest 5 days. How do you want to know if somebody is really consistent and disciplined enough after 5 days? I mean, it's simply not possible. So for the business, I would say for most firms, they put these guys into a simulated environment and then pay them out because it just makes the most sense. Because sadly, most of the people are not consistent enough.
Hmm. So, yeah. So, yeah, for that makes sense. So, how do you, like, as a co-founder of such a business, you persuade people to come in and invest within that business? Because, this business is hypothetically incredibly easy to understand because people lose money. Most of the money that you'll be making is out of signing up fees. And
Hmm.
with only the best people, you will make profits split. So how do you convince an investor or an LP? Like, I don't know which type of investors the
We
trading
didn't
company
have any
owns.
outside investors, so I cannot really tell you about that. Um,
Mhm.
but practically, what happens is that yes, it may be easy to understand, but running that business is a complete different story. Okay, it's just in theory, yes, most of the people lose, but in the end, this is not why you want to do it. I mean, you want to find these guys who are successful, who won't have the discipline to be successful, and you want to, as said, want to be really aligned with these guys. So it's not at the trading pit for sure, and probably some other companies as well. We didn't start to just get the money of some potential wannabe traders. So that was not the idea. The idea was quite the opposite. The idea was really what we wanted to find the guys who were good enough to trust capital. And then if you have guys who are successful and disciplined enough, I mean, then the money is not a problem at all. The problem, though, is, let's say, the step before, when you find a guy who basically is a little bit disciplined, then you have to check how he behaves when he's eligible to make money. Can he be, is he disciplined in contract sizing? Is he disciplined in this kind of trading approach? I mean, this is stuff um, you have to really invest into, let's say, as the investor, to be able to understand if this guy is disciplined enough. And in reality, um, frankly speaking, I mean, as I said, I mean, I'm not in the company anymore, but it was very hard to find these guys. Very, very.
Mhm. Yeah, I guess that it was very hard because, from my endpoint as an entrepreneur in the same field as you do, um, I see a lot of pain and I see a lot of difficulties with raising money and with finding the right people because people willing to invest in convinced business models. But I don't think that as an end user for those platforms, having the ability to have like 20 different accounts that I would be able to trade um,
Hmm.
with a tight strict clause, and eventually by twice a month, twice for 2 weeks to get money out. I think it's an incredible opportunity. Now, I would ask you this: why, after looking backwards, what was the biggest difficulty in raising this business? And when you arrived in front of the citadel, like the citadel that really cut you off, basically. And you feel like, yeah, there is no way to break it down or to tear it down. How have you passed that? Because within that field of value trading, you see a lot of pain, as they already mentioned, and suddenly you see an incredible challenge. You doubt yourself twice of how you will be able to pass it. So I'm asking you,
Yeah, this is
what
something
was
what I
this
can tell you
challenge?
right away. I mean, I said, I mean, I breathe this business now for 20 years. Okay. So basically, we were two guys who founded the company. We had enough money to basically to finance it. So we didn't need any outside investors. We didn't have, let's say, the necessity to look really for, let's say, every other month for money. So that's not something we needed to do anyways. And we had the experience as well. The biggest pain points, and this is something what I didn't foresee, for example, back in the days. I mean, I'm out of the futures trading business, right? Regulated on exchange trading. So I have a lot of experience there, and in let's say in the trading conditions and trading technology. Next to that, I had a lot of experience, and so this was a very, I would say, a business-wise something what I was able to understand, what we were able to have competitive offers and attractive, let's say, offers for the users with, let's say, the risk for our company being let's say manageable. So what I did not foresee was though that in the FX part, the Forex CFD part, it's a completely different game. Um, and the type of client what we stumbled over was kind of funny or interesting looking back because they really just came to basically fool you. And this is something what I did not see coming. I didn't understand because in the future space it wasn't really that possible. And but in the CFD side of things, there were a lot of people coming who really just came to fool us, and that's wild, you know. So when people come who are just there to betray you, and so who don't really
Hmm.
want to trade, who don't really
Yeah,
want to
what
be
and
successful.
can you please explain to the listeners why
Mm,
trading CFDs not under a regulated exchange
mm,
is equivalent to betrayal?
mm. I mean, in reality, when I was on Cyprus the first time, when I arrived in Cyprus the first time, I kind of it was an eye-opening
What
experience.
when he was
When I arrived on Cyprus the first time, it was an
yeah, but when
eye-opening.
which
It
year?
was a couple of years ago. It was 3 years ago,
Hmm.
like that.
Yeah, so not far away.
It's not far away. So, and
Hmm.
I remembered that I that I thought about myself that holy moly, there's a lot of stuff you didn't really know about the business. And this was especially a bit because I was not no futures guy. I was no forex guy. I mean, there was a lot of stuff I didn't understand. And in reality, on the forex side of things, 98%, I would say, of forex brokers globally are so-called b-book brokers. Okay. And the only thing what they do basically is to try to get the money out of you in reality. So there is no alignment of brokerage solution to the client. I mean, I personally think it's very wild. And when you go to Cyprus, I think there are about 200 companies registered there who run, let's say, brokerage firms. Let's say maybe it's a little bit less right now, and basically all to run the same business. It's to be-book clients and make money when the client loses. So for me, this was something I didn't, in that magnitude, I didn't see that, to be honest. And it goes even wilder. I mean, there are guys who at broker firms who reverse copy, for example, bad traders. So basically, they send orders to the market, which is the opposite of the trader. It's who's bad. I mean, it's crazy. Okay, so the thing what I can tell you, in my opinion, is it was an eye-opening experience, and in the future space, you want to see a person from the broker perspective survive and make money as long as possible because a broker makes money on the commission, but there is no booking or something else. And that's something I believe it's simply wrong. The problem is A-book brokers, which basically means that they route the orders through, are basically not in existence.
Hmm. I understand. So, um, That that was a pretty insightful discussion. So on to I would like to pass on to the next thing. So right now you're a CEO of TRU Quants AG.
Hmm. So basically, what we do there is overall what I do is, or what I did in the last decade, I started to develop or to run fully automated algorithm in 2011 for an asset for a small asset manager in Switzerland, and since then I basically improved my skill set there in how I built basically fully automated trading systems or algorithm. Um, yeah, so this was always my main, frankly speaking, part of basically my main business because I mean, Trading Pit was a startup, so we didn't make money there, we invested money there. But what I do is basically I have, let's say, I'm licensing out my algorithm to some bigger US companies. And these companies basically are giving these algorithm to their clients. That's basically what's happening or what I do. So I develop code and I develop trading systems, mainly on futures though. Uh, that's basically what I do and what I did now for the last couple of years.
Have you developed trading systems?
Yeah.
What do you mean, like Ninja Trader, multi-charts, those type of things?
So I,
Or
I I developed trading systems which run on multi-charts, on TradeStation, on NinjaTrader. So
oh, so trading strategies. So yeah, when I thought of when I thought of a system, I felt like something similar to Quant Connect or something similar to multi-charts as a system that will enable you to do whatever you would like to do fast. Um, but all right, so I would like to ask you as a Swiss guy, um, w- like speaking of trading in Switzerland. How would you describe this entire trading field in Switzerland? How much people are eager about trading, and how do you see as people as a man that breathing this business for almost 20 years, the trading business especially
hmm.
evolving in Switzerland, and who comes in and what players major play a major role within that business?
Hmm. I think in the last, let's say, I mean, the time frame, I can look back, let's say the last 15 till 20 years, I can really tell you that the market changed a lot in Europe. And when I mean Europe, I mean about the German-speaking part of Europe, the Germany, Austria, Switzerland, mainly. And there was a huge change. So let's say 15 years ago, it was very CFD dominated, Forex and CFD dominated. The futures part was always very, let's say, a niche. um, but what changed, especially in the last 3 to 5 years, that a lot of people go into the market, want to invest more into the stocks market. And in addition, crypto is for sure very, very popular now, especially with the young generation. So um, that was also one reason why I wanted basically to be in the trading business, let's say from day one. So let's say when I look 20 years ago, I knew that at one certain stage, people have to start to learn about their investments. And this was, I would say, if you would compare this now to the United States, people are, let's say way more inexperienced compared to the US guys. I mean, the US, let's say from the taxi driver to the nurse, everybody is invested in stocks. They know about Apple's, Tesla, whatever. In Germany or the German-speaking countries, basically investing wasn't that popular, but it changed. So basically, young generation for sure is interested in. So I would say young people 16 to 25 are very eager about it. And let's say the older guys like I am right now already, I mean, we have, let's say, have a way better background in investing compared to, let's say, 1 or 2 generations before. So I would say trading and investing, it became way more popular. Yeah.
Mhm. So good. And you are developing algorithms and you run some algorithmic quantitative algorithms on your end, and I guess that knowing such a broad network of people over 20 years of experience might be pretty hard thing to achieve. So I would like
Mm.
to ask you this. Um, if I would like to open an auto trading business in Switzerland, I would like to ask you, how would the Swiss market would react to my intentions, and what part could catch the interest of of the Swiss investors?
I mean, I would say, in general, German-speaking people are very cautious. So I would say the risk appetite is very little, to be honest. Okay. So the risk appetite is very little. So if you want to look for some investors, or let's say if you would look for investors, it will be pretty tough if you start out and don't have a network. So the main thing what you have to build is, well, you have to be a great networker. That's the main thing what you have to do. And then you have to be around in Zurich and be able to network there and then find people. I mean, in reality, finding assets right now today is way more hard compared to, let's say, 2 or 3 years ago. I mean, probably as well, 2, 3 years ago, it was way more easy than it is today. And so with the change of interest rates, probably some politics, I mean, it changed quite a bit. And I think it's harder. So especially when you're from the outside of Switzerland, it will be pretty tough to
Mhm.
find guys there who wanted to invest into a startup. Um, that's just what I've learned. So basically, the risk appetite compared to, let's say, an US investor, is there's a huge difference.
Mhm. So what are you what is catching your interest right now with developing trading systems with multi-charts or developing trading systems with um, just developing trading systems? What's catching your interest right now? How do you build and construct such a business? And what are your takeaways from your past businesses in the field that really drives you uh, onto a better surface to orchestrate such a business?
Mm. I mean, in reality, most of the stuff, I mean, I would say I trade my own funds. Okay. So, and I mean, 90% of my funds are being traded fully automatically, which is quite something, I guess. And I would say, I mean, if this year goes like it is, like until now, I'm pretty happy with that. And so I'm very interested because I'm very curious. That's, I think, something which I always was and always will be. And then I love trading. I like the dynamics of the market. I like that basically the markets can be very wild, and but also, let's say, the different characteristics. So to me, it's something what I love. And the reason why I went into, let's say, algorithmic trading anyways, was because I think that an algorithmic trader has a lot of advantages compared to somebody who trades discretionary. I mean, I personally think that this big number of losing traders is mainly because of discretionary trading, and that's all how I do it as well. To be honest, I mean, on
Yeah,
my
but this is a really complicated task to plan a fully automated trading system. You know, YouTube is full of videos, unnecessary videos for most of the for most parts.
Mm,
Related to, all the things that speaks about algo trading. People do not really know what algo trading really means. So to build such a system that's been able to hold an alpha for a long period of time, this is a complicated task. So
mm,
if I was able to code, or if I was able to have a business plan for strategy, what would be my what would I need to do in order to construct an alpha? Now, I will tell you something that we have had some guests in related to that topic, and I asked them the same question that I'm asking you right now, and they both answered in a really unique way that really developed my thinking around quantitative training. Now, I would like to ask you, but not as a quant, not as
mm.
a technical guy, but as a business guy, how would you plan an alpha that will that would be able to make money under all potential market conditions? And how would you tell someone uh, what might be the right occasion where the markets are ranging onto a part that you need to take care of?
I mean, first of all, I mean, I think my portfolio right now, what I trade consists of 47-ish different strategies. And
Which is
mainly,
much, which is good.
sorry?
This is good. This is diversified.
Uh,
How do you
and across
evaluate?
multiple markets. So I mean, I'm trading a lot of different markets. So that's, I would say, the base of the strategy or the portfolio. I mean, in reality, though, I'm trading it very conservatively, and you cannot really have, let's say, a 100% safety into, let's say, what will happen next year. I don't know. I mean, in reality, I don't know. And the market, especially, let's say, the last since 2008, it was just on the bull run. So at some stage, this will probably break, and then I basically will have to for sure switch the portfolio of strategies as well a little bit. I mean, from my what I do, I always try to have long and short strategies in my portfolio. So I just don't. I mean, I just hate if I would just trade long only. But there is some questions coming up as well. So I mean, there is no way to really plan this. But I mean, the homework I've done before. I mean, in extensive testing over the last, let's say, on a data set going back to 1989 or something like that, 1990 on some markets. And I mean, on top of that, I have a layer of let's say, monthly loss limits, weekly loss limits on the portfolio basis. And that's basically what I'm trying to do to prevent myself of, let's say, occurring huge losses. And I didn't see that yet, to be honest. So the biggest loss month over month, what I had, I believe, in the
Mhm.
last 24 months was, I believe, 6%, but averaging 40% plus a year. I think
Oh my
that's
goodness.
it's really, I mean, I'm really happy. I mean, reality though, I mean, you cannot really say, hey, this will go on forever. That's one item. And yeah, and I trade still very conservative. So next year, I'm planning to increase, let's say, size a little bit. I'm planning to, let's say, trade a little bit, maybe more aggressive, but I have to see. This year and the year before was very conservative. And I mean, again, the market's opportunities have just been amazing. And that's basically how it is. Yeah.
Mhm. So, yeah, markets are amazing. And by the way, they amaze me each and every single time more than they have the last time. Now, I would like to ask you if I would like to elevate my trading skills, my discretion trading skills,
Mm.
um, what would you suggest me to do? Where would you suggest me to start out of your experience? If I would take you 20 years back with the amount of knowledge and
Mm.
education that you have nowadays, what might be your first step in order to execute your way within that world of trading?
Mm. I mean, to be honest, I believe that so what would I do? So basically, so what I'm believing in is really data analysis, data, what I can really test and have, let's say, proof of, let's say, if at least of a backtest, if a strategy works or not. So this is, I'm believing in quite a bit. So without having a strategy which I'm able to test, code and test, I wouldn't touch it anymore. So this is a huge difference compared to a couple of years ago. So that's one item, for sure. And then it's really about how much risk capital I could apply. In the beginning, when I was very young, let's say 20, I mean, yeah, 20 years ago, I mean, the good thing was that I was very naive, and when you're basically acting stupid, you are lucky sometimes. But in reality, it could be, I would say, it was, I would for sure try out prop firms as we did. That was one reason why I wanted to start trading Pit, to be honest, because this would have been something different. This wasn't available back in the days. And looking back, to be honest, when you're young and you don't have huge expenses and have the time to really invest into educating yourself. I mean, you have to make the experience. I mean, for sure, I would have invested more in education. Um, but again, back in these days, there wasn't really, let's say, the big education possibilities. I mean, this was just something. It was just a different time. But looking back, for sure, this would be something what I would do today still. Yeah.
Mhm. So, yeah, I do would like to expand the discussion with you around the quantitative trading title. So I would like to ask you, after developing 47 strategies, how do you manage such a portfolio that enables you to gain 40% over 40% annually, basically?
Hmm. Well, so basically, what I do is, so first of all, I'm able to set weekly, monthly loss limits. So that's basically I have a system in place which helps me to limit my risk there. That's one item, and the other item is really that I'm how's it called? That I'm really then watching the equity of these individual systems every month. So basically, I'm assessing how good a strategy works, or let's say every month. I've developed not 47. I basically am trading right now 47 strategies, but I've developed hundreds of strategies which are really good strategies. I'm not talking about an EMA crossover or something like that. Okay, I'm really talking about solid strategies, and I've developed hundreds of them. And for sure, I would say over the last couple of years, my skill set has developed quite a bit. I mean, it's like everywhere else. At some stage, you will be able to uh, yeah, you will be able to do. You'll be simply becoming better. And I can tell you that I've improved quite a bit. So I would say the main base, what I do, what helps me is mainly my possibility to manage my risk. So the risk management, the position sizing, the amount of risk I want to apply to the overall portfolio is, I would say, the main measurement to take before you really start trading.
Mhm.
And I'm lucky because over the last couple of years I was able to save some money, so I don't need to leverage a lot, yeah, but making substantial amount of money, and that's just a clear advantage. I mean, yeah, that's basically what's really helping to survive in the markets, right?
So sounds good. Um, so after managing, this is pretty comprehensive. There is no coherent solution to it because you know s- I would ask you a question.
Mm,
Let's follow this. How would you set weekly or monthly loss limits?
mm,
And after that, how do you take a derivative out of it, and which algorithms you plan to trade on this following week in order to maintain a, an upward equity curve?
mm. So I'm not changing the trading systems really if they have a small loss or something like that, I mean, I will, let's say, assess a trading strategy if it really there is no progress, let's say, over a certain amount of time. So this is then the case when I really, if I when I would maybe think about changing, changing or switching out the trading system. Um, in reality, what I do is for sure I have hard stops on the month. It's a percentage of the portfolio. And I have a hard stop on the week. Um, for sure, this is not about 2% a week, because I mean that's simply not doable, because there will be volatility on the account. But I'm trying to be, let's say disciplined when it comes down to the position sizing. It's all about, I mean, it's all about how much, let's say, pressure in terms of contract load you want to put on your portfolio. And if you are, let's say, conservative, you won't face, let's say, the roller coaster equity curves. And that's something what I am enjoying quite a bit. I mean, I think in the last 24 months, I think that no drawdown really was longer than I think a couple of weeks. So I'm really, really satisfied with that. And but yeah, maybe there will be a time I have to change something. This could be possible. What I did in the last 24 years, though, I changed a couple of algorithms. Yeah. So I switched a couple of algorithm stuff, which maybe I didn't really like the performance very well. Maybe yeah, this is something what I did.
Mhm. I understand. All right. So, first of all, Christoph, I would like to thank you for your participation within our show, the Trade Pod. Actually, I have learned a lot. By the way, I would have to say that after having so many discussions with traders around the world, I really think that like your point of view over this market as an entrepreneur who have made an incredible move within that business of trading in general. It really fascinates me. So I really liked that conversation, speaking to you, learning from you, and absorbing as much as I probably can. So thank you for your participation. It was a pleasure having you today on our show. Um, and yeah,
Thank you very much. I mean, frankly speaking, I'm honored. Thank you very much for you taking the time. Thank you,
yeah,
Alan, as
thank you.
well. Um, I'm just a normal guy. I mean, but I fell in love with trading, let's say, over 20 years ago, and this is where I am. But yeah, thank you very
Yeah,
much.
that's this field. So yeah. All right, mate. Have a
Thank
great
you.
day.
You as well.
Thank you.
Bye-bye.
Bye bye.
Ciao.